Right now, uncertainty reigns in this market. We had another rough day near the end of a rough month and a rough first quarter. But throughout this difficult period, for so many formerly beloved stocks, plenty of names have actually managed to rally, as I said at the top of the show. They're what works in this new environment, which is why I've been spending all week highlighting the best performers in the S&P 500 year to date. And now I've got another one for you. Uber Technologies, up more than 24% for the year, making it the fifth best performer in the S&P. About a month and a half ago, I stuck my neck out and defended Uber after it reported a widely panned quarter. Stock fell 7.5% in a single session. That seemed wrong to me. Turned out to be a very good call. It's rallied quick $10 since then. Now, what made me confident enough to risk my neck on Uber? Well, in management's own words, it was their, quote, strongest quarter ever, end quote. Complete with record tips, gross bookings, and adjusted EBITDA. Gross bookings were particularly impressive, up 21% year over year. I couldn't believe why the stock was going down. Monthly active platform customers were up 14%. Total trips were up 18%. The rideshare business is booming. While Uber's freight segment, that is their smallest, by the way, did have a gross bookings miss, the company's two main businesses, mobility, meaning ride sharing, and delivery, meaning Uber Eats, both beat expectations for gross bookings. Even though there was some nitpicking on the guidance for the current quarter, I said that it wasn't enough to justify the stock's vicious 7.5% sell-off. Sure enough, over the next 3 days, Uber immediately shot up nearly 22%. Clearly, someone got it wrong when they were selling. The stock's fared pretty well since then, too. So is there anything else that's been keeping shares afloat, besides the market acknowledging it judged the last quarter wrongly, harshly? Only activist investor Bill Ackman had a part in this rally. The stock bounced back so quickly after the post-quarter sell-off, in large part because Ackman disclosed that his hedge fund had taken a $2.3 billion stake in Uber. That was interesting to hear. He's certainly come a long way from when he mistakenly accused the company of stealing tips from cab drivers and overstating his profits last spring. Hey, I mean, if you can't beat him, join him. Uber stock has also been buoyed by a complicated history with robo-taxis and, of course, with Elon Musk. Interestingly, the stock set an all-time high at the time back on October 11th. Do that just one day after Tesla's much-anticipated Cybercab event? While the Tesla event was initially seen as underwhelming, which is what initially pushed Uber higher, the stock immediately reversed course afterward and then started moving lower. The results of the November election only reinforced the belief in Elon Musk's ability to make these seemingly far-fetched cybercab and robo-taxi dreams a reality. In his defense, it wouldn't be the first time he's delivered on some lofty promises. How do you even catch a rocket anyway? Hard to blame anyone who was enthusiastic either. One of the largest backers of the Trump campaign, everybody figured that Musk would get favorable treatment from the new administration. Turns out that was understating it. Of course, since Tesla hit its all-time high of $488 and change in mid-December, well, things have changed. Tesla and Musk have fallen out of favor on Wall Street, putting some cold water on the company's grand autonomous driving ambitions. But that's been good news for Uber because it means people aren't as worried about the threat of robo-taxis. Of course, I think the whole line of argument is absurd. Self-driving cars should have no effect on Uber. These guys have already devastated the cab companies. Even if Tesla or anybody else starts selling self-driving taxis, they'll need to make their peace with the ride-sharing apps if they want to do business. In fact, as management sees it, Uber's uniquely positioned to capture the $1 trillion plus autonomous driving opportunity here in the U.S. At the end of the day, it'll take years to start seeing these things in mass production. And even when they get there, self-driving cabs face so many major challenges, especially cost. All the tech in these vehicles makes them very expensive. Once they get sold, the owners of these self-driving cars need to get a return on their investment. Sure, someone like Tesla could try to operate a fixed fleet of robotaxis like the old cab companies, but as Uber's management said in its latest prepared remarks, quote, in a typical large city, a fixed fleet designed to meet the weekly peak will have up to 95% of vehicles idle during the multiple weekly troughs, end quote. They go on, quote, conversely, a fleet size below peak cannot deliver the reliable 4-minute ETAs that consumers expect, end quote. Now, this gets even more complicated when you consider fleet sizes need to change pretty dramatically throughout the year. You won't get a great return on that $200,000 car if it's sitting idle 95% of the time. So how the heck can future autonomous vehicle owners make money? Simple. They partner with Uber. According to Uber, quote, an average utilized AV can run as much as 100,000 miles a year, compared to a typical consumer vehicle at 10 to 15,000 miles a year, end quote. That's extended drive time. Drive team means these self-driving cars need all sorts of extra servicing, multiple charges per day, and extra cleaning. Luckily, Uber has 15 years of experience with 12 billion annualized trips to help autonomous vehicle owners manage all of these things. That's not even considering the things you don't think about, like fare disputes, lost item returns, stranded vehicle rescue, and insurance claim resolution. It costs Uber a lot of money to develop this expertise, but the autonomous driving companies that partner with them get, and I'm going to quote this here, to plug into the cost structure instantly, end quote. They go on to say in their prepared remarks that, quote, put simply, we are the only player with the scale and expertise to run AV operations at the highest efficiency, period, end quote. Pretty emphatic. And it seems like the market has been gradually warming up to this reality as the fears surrounding the threat of robotaxis have cooled. While all the focus is on the future of autonomous driving, it's easy to forget that Uber has a lot of other innovation going on that's finding success with. This includes Uber for Teens, which was up an astounding 50% sequentially in the fourth quarter. UberX share has exceeded $2 billion in annualized gross bookings in less than 3 years. Management also notes that its Uber shuttle scaling nicely in New York, including more routes to LaGuardia, which is, by the way, a nightmare to reach using public transportation. In fact, just today, they're launching a new, they just launched a new shuttle to JFK. But here's the bottom line. Uber's another example of what's working in 2025, though it's more of a one-off success story than a participant in the broader theme, like the others I've mentioned. Still, I'm glad I defended this one after last quarter, and I don't think it's done going higher. Why don't we speak to Bob in Arizona, please, Bob?
Hi, Jim. It's Bob, first-time caller from Prescott Valley, Arizona, home of America's oldest rodeo.
I did not know that, and I'm glad you're calling in. How can I help?
Well, I'm asking for your thoughts on the merger between Paramount and Skydance.
Well, you're done there. You just want to, just ring the register. You're done. There's not going to be any more upside to speak of. Let's move on and find something with a little more growth. Now, let's go to Robert in New York. Robert.
Jim, we're going to find a stock right now that has a lot more growth, in my opinion, because years ago, you said to buy this baby and just watch it go. And you were right again, as usual. But this company has a market cap of around $130 billion. They're the leading global provider of financial technology and payment solutions. They have very secure and innovative payment processing, electronic billing, digital, and e-commerce solutions, Jim. They keep buying back the stock. They have a ton of cash. The stock has soared over 59% this past year and 12% year to date, Jimbo. You made us money on this one, baby. And this is a monster. It keeps going up, 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 even when the market goes down. Serve.
All right. Well, I liked it because Frank Bisignano was the CEO, and I understand. But I believe he's going to Social Security. But I will tell you this: I think he's got a good team. It sells at 21 times earnings. It's a very, very good company, and I'm sure glad I recommended it. But it wasn't really mine. I knew who the CEO was, and I think he's terrific. And that's exactly how we made the money on that one. Anyway, Uber's success this year is more of a one-off story rather than a broader theme at play, but I don't think it's done going higher. Much more Mad Money ahead, including my look at a coal company that you put on my radar. Then, after yesterday's news that 25% oil tariffs are on the horizon, I'm telling you where I stand on trade in the Oval Office announcement. And oil calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.